Here we go on Rethink Real Estate, a episode that we wanted to record and get out as quickly as possible. Andy Gurczak is the CEO of All City Adjusters. Now, he is an adjuster. Now, he was previously on an episode. It was one of the most popular episodes that we'd had on Rethink Real Estate before. And now with obviously the things that have happened in LA, we wanted to make sure that we got him on to give as much advice as possible when it comes to handling claims with the insurance company. We get his outlook on the insurance industry and where it is going. And I asked some pretty detailed questions about circumstances that people might be in at the moment. So hopefully it helps. Thanks so much. Welcome to Rethink Real Estate. My name is Ben Brady, and this is a real estate podcast aimed to deliver sales strategies, marketing tips, and business insights from industry experts and myself to build a listing-focused business for the future. Let's get into it. Andy, welcome back to Rethink Real Estate.
Ben, thanks for having me back on.
Well, I was just saying, you and I were talking off camera. You were one of the most popular episodes that we had all last year, and it seems to be that the insurance industry definitely has some appeal to it from people's listening perspective. But it could be your choice of hat this time around that gets us there.
I think it was the hat. I don't know. Did I have a hat last time? I'm not sure.
No. You had hair that I'm envious of as I lose mine. Okay, so either way, but mate, it's great to have you back on. Thanks for agreeing to, because obviously your industry, being the insurance industry at the moment, is an incredibly hot topic because of the factor of what's going on in LA at the moment. And you were kind enough that when I reached out to give us your time here today, and I just think that first and foremost, I think that from an overall insurance perspective in the industry over the US, and then we'll come back to California and what's happened. What are you seeing from an overall residential insurance perspective in the US at the moment? It just feels like it isn't a good space for the consumer at this point. As somebody that has a policy that I had to renew in October of last year before the fires, I had to pay 3 times the amount. Now, I'm in Newport Beach, so I had to pay 3 times the amount of what I paid previous years to get somebody to insure us. We're not in a high fire danger area. We're not in anything. But that seems to be the story that I'm hearing across the US, full stop.
That's everywhere, from California to Florida, Midwest. Something we do for when we go on the shows like yours, and we've talked about this for your listeners, we talk about reviewing policies for, listeners, investors. And right now, our own clients, we keep getting emails and calls and, hey, our premiums have gone up. Hey, is there other carriers we can shop around? Hey, do you know anyone else? So it's affecting residential, commercial, I think all kind of aspects, because I know for our own business, and we're low risk business. I mean, what do we we do paperwork, and we are having a hard time. Our insurance, who's been with us for years, wants to drop us, and it's hard to find insurance. So it's kind of wild right now what's going on.
So I want to draw back down to the California situation at this point. If somebody's like, we were saying that you have some friends that have been affected by it. Obviously us being in Southern California, we know several people that have been affected by it as well. Is that if, like you just said, that it's going to be a very long time until these people can get anywhere near back to their houses again or anything like that. What's the process that these people are going through right now, and what is happening and what should happen if there was somebody like you that got involved?
Yeah, so there's going to be 2 scenarios. So there's going to be people that go back to their home and there's nothing left. Right, it's a total loss. That person now has to recreate an estimate, recreate all their personal property. That's a very challenging loss, right? Because it's what was there. You have to go through pictures, Amazon receipts. I mean, those are the clients that's a lot of one-on-ones that we spend with clients like that to base, like, even the personal property. You want to max out that coverage and you want to get every penny that you had in that house. How do you recreate what was in each room, right? When we can dig through a room, it could take us one day to go through one room and inventory just one room, a 12 by 12 room, because people have a lot of stuff and it takes a lot to take a picture of each item. So now when you don't have it, so now that person's going through a whole, what do I do? I have nothing. How do I recreate this, right? And what's my coverages? Then you have the other homeowner who's going to go and the home's still going to be there. Now there's just going to be a ton of damage. And now it's actually fighting the insurance to pay for, even though it's not total, that should be a total loss, and he's going to be fighting a different battle.
Right. Talk to me about the battle that's going to be fought, where they're just going to, will some insurance companies just deny coverage whatsoever?
I'm hoping not. We keep talking about with our inner circle about kind of how this is going to play out. With all again, there's already been so many fire insurance that were canceled before this happened, right? There's been, I forgot how many thousands of policies were canceled. We just had a call today from an insured that, he could not get insured. He was dropped 2 months before these fires, could not get anyone. Finally, then he ended up getting the California Fair Plan.
Right.
But he could
And
not get any insurance. So
well,
very interesting.
what is the California Fair Plan? Because the thing that I'm really curious about is that I know for a fact, doing real estate in Florida, they have they don't have the fire danger that we do based on the volume of rain that they have. However, that being said, is that they do have a high hurricane chance. Like, how do they get hurricane insurance then, or that type of insurance? Because this has happened and devastated, like it's like New Orleans as well, like through what happened with Katrina and things along those lines. How do these places, or how do these because property values in Florida, I'd probably compare, like in some of these really high end marketplaces in Florida, I definitely would compare to the Pacific Palisades and Malibu. So how does it work there?
Same thing with when it comes to policies and premiums, it's same thing, right? They have hurricane and flood. So they have two different. They don't have fire. They have fire, and don't get me wrong, they have fire insurance, of course. But then they also have hurricane and special deductibles for hurricanes. You're talking about 2%, 3% of the property value. You're talking about flood insurance, which only covers a certain amount of stuff. I mean, flood insurance is very bare bones. So they're on their own in terms of, because we deal a lot with hurricane damage as well in those areas. And you're dealing with flood, you're dealing with hurricane, and that's a whole different. There's only so many carriers left that are insuring properties within so many. A lot of carriers have said, hey, we're only going to go this many miles off the coast. Like, we don't insure anything on the coast anymore. So they're having the same battles in Florida. The only thing that helps, I guess, Florida is, the statutes for insurance are a little bit more lenient, whereas California, the carriers aren't just fighting the amount of fires and natural disasters, but they're also fighting the government and everything else that's happening in California.
Like, the DOI, the Department of Insurance,
yes,
correct, in California.
If you've ever talked to the IAs or independent adjusters who've worked in California, they'll tell you how much that it's more paperwork that every day there's so much paperwork on one claim that it's just overwhelming. It doesn't make, it's the insurance company can't even handle a claim, right? If they deny it or they do something, right away, it's taken into law, and it's, they're against everything. So there's that aspect of it as well.
Yep. Now, I think that it's important at this point as well. Like, I do want to get back into a bit more of the detail of things, but I just want to make sure that we insert your role into this, because at the end of the day, you've really opened up my eyes to the insurance industry on our last episode here, and in the sense that it's almost to the point, like, don't get me wrong, if there is an emergency, you've got to call the emergency services and everything along those lines. But my second phone call would be to you, Andy. Do you know what I mean? Like to be, hey, this has just happened. What do I do? Because as you said, is that so many people find themselves in a situation where they're giving the insurance company information, and unfortunately, the insurance company is just looking for faults in order to not pay out 99% of the time, whereas you're going to obviously protect that. So can you just insert your role into this? Let's say that somebody did have a home that did burn down, okay? What is the next step? How would they involve you in that?
First thing I'm going to ask is make sure everything's protected, whatever you can. If you've been there, if it's burnt down to the ground and there's nothing, well, there's really nothing you can further protect. It is what it is. You're kind of in that situation. But it's us preparing now, starting to prepare an estimate. Now, here's the interesting thing that's going to happen. Are the carriers that are insuring the people that do have insurance, that there is carriers, are they going to go in when it's a total loss and just pay limits right away? Or because of the situation and how big it is, are they going to say, well, present us an estimate, present us this, and try to delay, which we think that's what's going to happen. I don't think with the carriers left that they're just going to go in and just start paying limits on everything.
Right.
So in that case, you're going to have and prove the loss, just like any other loss, even if it's a total loss. Even, the structure itself, writing an estimate based on a building that's burned down to the ground. Because we had a call today, and the gentleman said, hey, I only have $4 million in coverage. I know they're going to, it's a total loss. They're going to pay me limits. I'm like, how do you know? Did they tell you? Did you get it? No, I called, but I know the damage is about $6 million. So they're just going to pay me limits. I'm like, well, I I wish you luck, but that's 99% is not going to happen.
Yeah. So involving you in that situation in order to understand what the next part is to basically make sure that people are not giving away information that they shouldn't. But if someone comes to you and it's a total loss, and then you go in and then you do an estimate, you go room by room, you go through everything that ultimately is then lost in order to then provide that to the insurance company. Is that correct?
Correct. And now when it's burnt down and there's only rubble, now you have to recreate the estimate through photos, through prior assessor's office information of square feet, so then you're working with the insured, making sure that your sketch and that, we're estimating properly what was there before, because it's all rubble.
Yep. And then if there is let's say the insurance company goes because you're going to be the one communicating on the client's behalf, obviously,
right.
Is that if they come back to you and say, Andy, we're not covering this, or Andy, we're only covering this much, what does the dispute process look like? How does that escalate?
Yeah, correct. So then now we just can't say, well, you owe, it's not just you owe. You have to prove it. So you have to have supportive documentation. So if we're negotiating, we're like $1 million in difference in structure estimate, basically. Well,
Yep.
If we're asking for another $1 million, we have backup for it. We know why, right? We know what material was used, or we have the proper documentation to show them. So it's proving the documentation and going up to the right channels. But there's claims that, you fight and it's, 4 months, 5, 6 months, and you're still trying to go back and forth. Like we have a large fire right now in California. I forgot the location. That's been going on 7 months. And, we've brought in hygienists and our own engineer that split out actually exactly per our first estimate that we did from day one, that they confirmed is 100% legit. This is what's damaged. They still are halfway short.
Really?
And they keep sending these small estimates saying, okay, well, now we'll pay this much. Well, now we'll pay this much more. So now now it comes back to, well, we're going to keep fighting this, right? Because that's our job. That's what we get paid for till we're done. But now it puts, it's putting pressure on the insured because he has a family.
Yeah.
Now the insured's like, well, I have to start rebuilding. I have to start doing this. Well, if you start rebuilding and then you lose. Then you were done.
Yeah.
Then you're done. You're giving up. They know that. And that's what they're doing. And that's what I'm most likely what's going to happen with a lot of these California, with these fires.
Yeah, and that's it's kind of the unfortunate part about that is time is not a friend in any of these situations,
Correct.
But it is the friend of the insurance company. It's really interesting, Andy, that the reality is that your job has been created just based out of the lack of I don't know what the word is. It's the lack of care, really, of the insurance company, in an industry that is there designed to take your money easily, but then not give you any of that money back to try and provide peace of mind. What do you see happening? Like, let's go down a little bit of a rabbit hole here. If I fast forward 10 years from now, do you see any major changes in the insurance industry in any way, shape, or form? I know that there could be government mandates and things along those lines per individual states, but what do you see in, say, 10 years' time for the insurance industry? Because I really do believe that the California prices of real estate are going to have to go down, considering the added carry cost that there ultimately is in carrying real estate. I had a young guy in our team come to me the other day, Andy, and say to me, I want to buy a house. And he's got a really hefty deposit. He's got all those different things. And I've said to him, I'm like, how much do you pay rent now? And he's like, I pay $3,800 a month. And I'm like, okay, do you like where you live? He's like, I love where I live. I live down on the peninsula. Like, I love it. And where are you thinking about moving to? He's like, well, I could probably only really afford outside of Irvine or maybe even, Corona or something like that. And so I've gone and had a look at all different things with him. And I'm like, well, with all due respect, like, you usually buy a property because it's going to incrementally build equity over a period of time. But with interest rates the way that they are, then pile on the property taxes and utilities, and then also now double, triple, quadruple your insurance. The point of this is that you're better off taking the $200,000 that he saved, putting it into the S&P 500 and forgetting about it, versus actually owning real estate in this sense. Now, again, I know I'm in real estate and I probably shouldn't be saying that, but what the hell is going on here? If the insurance is going to just escalate to that point, it just doesn't make a great deal of sense from a return perspective.
Correct. When you're looking at an investment, and same thing in Florida. I have friends in Florida that own real estate that are trying to get rid of real estate. They're trying to push away and they want to be gone because with insurance, with already thin margins and such a competitive, especially in the Airbnb, a lot of friends in the Airbnb market, so competitive. that now with with the insurance, with flood insurance gone up so much, and hurricane insurance, doubling, and the margins aren't there. They're making less and less money. It doesn't make sense anymore.
Yeah, that's right. Now, Andy, I wanted to ask this question in the sense that, I asked, what do you see the insurance company? And I railroaded it with another question, so forgive me. But what do you see happening in the insurance industry, say, in 10 years' time? Do you see any major shifts or changes, or is it just all about consolidation?
In terms of what they're going to be doing with these premiums and stuff, something's going to have to there's going to be more either other carriers, new players that come in that start insuring. You're going to have to. I mean, the government might have to step in and do something or they're going to have to allow more regulations to let insurance companies come in, so there's more. It's more competitive. So you can lower some of these premiums, so there's more competitive. So there's competition is going to create better pricing. In terms of claim handling, like in terms of where we see, because we don't see the premium stuff. We don't really see much of. We don't deal with. When it comes to claim handling, it only gets worse because again, ultimately, the lower the payout, the longer the claim is delayed, the better for the insurance companies. And they've all caught up to it. Allstate started it. USA followed. State Farm has followed now. The stuff that's going on with State Farm in the Midwest with all the hurricanes and them coming in and saying, well, we're going to just, there's damage everywhere on the outside, but we're only going to pay for a couple shingles and a couple things. It's only a matter that there's going to be lawsuits following them. So the claim handling in 10 years, it's already, I think this situation in California is going to be really bad, and it was really bad in Florida after the last hurricane. I think in 10 years, it's even going to get worse. It's going to get even worse, and there's going to be a bigger push for public adjusters and more attorneys.
Yeah. There's a couple of startups that I've heard about that at the moment, like, again, if the government could obviously get behind some of these startup companies to actually insure high difficult areas, and do different types of creative things around premiums and different stuff. I don't really understand what all of that is. Are you aware of any, have you seen any like smaller startup companies at this point?
I have not. I mean, we deal with some small insurance companies starting up.
Mm-hmm.
I know Lemonade is one that came in the market. They're all, their whole online, no agents, no nothing. But we have claims with them. And when it comes to claim handling, it's as shitty as everyone else.
Yeah, there you go. Well, see, that's the stuff that the people need to hear on the podcast.
No one sees that, right? Because everyone goes, they have great commercials, they have great rates. One of my clients reached out and says, hey, can you guys check? And I know their whole portfolio. And they said, this carrier raised rates. And I'm looking at how much they raised rates, and they didn't raise them by that much. He's like, do you have someone else? I'm like, well, the ones we're going to recommend are like some of the better carriers, the best ones, and they're going to charge a lot more. So if you have a problem paying this, then there's only downhill from here. Like this is already a mediocre carrier. It's only going to get worse. So no problem. You'll save a couple bucks on your premium. But when you have claims, have fun even with us. Most likely it's going to go past us to an attorney on each claim. So now you're not going to get payouts on each claim. So
who is speaking of which, who is the gold standard, would you say? Well, when I say gold standard, there's obviously probably not one when it comes to claims, but tell me, give me one that might be decent to deal with.
One that's decent on one that's actually large scale, that people know about, that they're everywhere, and they're actually in California. So it's Farmers Insurance. Farmers has always been one of the better carriers to actually handle claims and pay claims.
Okay. That's interesting to note. Yeah, that's interesting. Now, I've got a question from a more technicality side of things.
And I say that as we're handling like so many claims with them, and there's some claims they didn't pay out, but when it comes
by default,
easier to deal with them and their managers and everyone else, they still have a lot of experienced people on their staff, which is nice. Whereas, a lot of these carriers have resorted to, contractors and third-party vendors.
Okay. Now, I've got a technical question from a perspective of, let's say that my home burnt down in the Palisades. What happens? Like, I have a mortgage of $4 million. I think the average sale price of the property or average value of a property that burnt down was about $5 million in total when you look at those areas. Is that, let's say I have a property of $5 million. I've got a mortgage on it of $3.5 million. What happens to the mortgage and the payments that I need to make when I can't live in the home? Is there anything that happens to that?
You're still making those payments.
Right. Is there any relief that most mortgage companies would have?
That's going to be, I've never heard of anything like that now, because this is such a mass scale that this happened. They might be doing something. Stuff like that. We try to help people, get money in different coverages. to help them offset that, paying off that mortgage still. Because you still have to pay that now while you're rebuilding, while you're negotiating the insurance, while you're doing it. So, those are hefty payments while you still have to buy, all new stuff and everything else like that. So,
Yep.
and a lot of those properties, there's also that question, what's the cost to rebuild? What's the cost of the property? Because the cost of the property might be $5 million, but the cost to rebuild it might only be $3 million.
Yep.
Because the gentleman we spoke with today, I looked at that property. He's saying, it's going to take $5-6 million to rebuild. Looking at that property in the square foot, I think that estimate was more around $3.5 million.
Yeah. Yeah, that's right. And that's one of the things that, it's one of those things that I went through with our own real estate that we have, is that looking at the actual coverage and you're sort of like, well, hang on a second, why is it only that much when I paid that? Oh, wait, sorry. Well, the land is primary, the position and all of those different things. What do you typically see though, like in an area that has been affected from a large scale insurance situation? The one thing that I think most people, like I know some people in the Palisades at the moment that have got architects, have got plans and have got things ready to rock and roll. But the biggest challenge here from a rebuild perspective for anybody on the coast of California is the Coastal Commission and the regulations that have to go through that and all of the regulatory approval processes. But also the other part is that they're going to be in a construction zone for the next however many years that it takes, which is not going to be a good quality of life. However, coming back to what I was going to ask you is that, what do you typically see from a construction perspective that happens in a neighborhood like that? Do you typically see construction prices go down because there's so many people trying to bid on them because they have to be competitive? Or do you see it just escalated up?
Just escalate up. Yeah, okay. Usually when you have those circuits. So I know when we did, we were doing a lot of properties from this, I don't know if it was Ian, in Florida, in Sanibel, right? Sanibel is already it's already its own island. It's hard to get to. The closest Home Depot is an hour 20 with no traffic, right? If one lane doesn't get closed. So now you have all these contractors. Now, there's only one Home Depot. Now it takes, 3 hours. We had to adjust each estimate to account for, right? We had to account for travel times for contractors, shortage of material, because the program that the insurance companies use for estimate, it adjusts a little bit of the material pricing, but not all the extra cost that it's going to take now, right? Because a lot of material now is going to be shortage in that area. So you're going to be have to sourcing material from further if you want to move your house. Like, I had friends that brought truckloads of material from the Midwest to Florida to get their homes done. Because if they waited for contractors to free up and used it, it would take 2 years to rebuild instead of, 6 months.
Yeah. That's a good point. Now, Andy, I just want to round out the episode with just talking about your company and how it obviously helps. We spoke about the fact that you'd be the second phone call after something dramatic happened where insurance was going to be need to be used when it came to, whether it be residential, whether it be commercial, whether it be industrial, whether it be anything along those lines. But also just remind us of the fee structure and how all of that kind of works. Like if I've got to go and we've got to get experts and all of those different things to sort of fight the insurance company, is that an out-of-pocket expense for me as the insured?
Yeah. So architects, engineers, we submit that. That's usually paid by the insurance company.
Okay.
They like to send in their own hygienist or hire their own party. Most of the time, you can still bring your own party, and it's still covered by them. We just always make the insured aware, like, hey, if we bring in our own engineer, there's a chance they say, well, we're not going to pay because we brought in our own guy, right? Like they're very sneaky. Depending on the adjuster, the insurance company, they literally have their own rules they play by. And especially now with all these claim payouts, they're going to be very stingy about when it comes to paying out stuff.
Yeah, that's right. And then sorry. And then from there is that, how does it work from there?
Yeah, our fee has always been 10% on a large scale, and with these large homes. In this scenario, we've dropped our fee as way. I think our fee now is it's starting at 7%, and then it goes down from there for certain clients, just to help out and kind of, these are large scale properties and there's a lot of money, but there's also, with people having less insurance, and we're going to have to adjust our fee to help them. So then they have more money to rebuild. So, we're trying to adjust so we can help more people. Again, in a scenario like this, not that we want to, but you kind of have to, just to get these people in the right, as quickly as possible, get them back in a good position.
Well, Andy, I just want to make a comment on that from a personal experience side of things is that, and again, not personally have I used you guys, but I've seen and had some feedback from some people that reached out. You know, we had over 70,000 people listen to the episode that you did last year, and we had some people make some comments that they had worked with you before and how good you were within all of our social avenues and everything like that. I just want to make it pretty clear to people is that the reality of the money that you can get out of the insurance company that they're trying to keep away from the person that has been insured, I think your fee is more than worth it from the perspective of what you guys can grab. So again, we got some really great feedback and hence why we wanted to have you all back on Rethink Real Estate. But thanks for joining us today, Andy. I think this is going to be very useful. I wanted to make sure that we could get it out as quickly as possible. So this will be released this week that we're recording it, so which will be great. So either way, we appreciate having you back on Rethink Real Estate.
Yeah, Ben, thanks for having me. God bless. I hope it starts rebuilding. Hopefully there's more, I guess positive that comes out of this, and people start rebuilding, and it's, and it gets. Hopefully, the insurance carriers are going to play fair and pay claims more fairly than we're assuming.
Well, I hope that the fact that it shines a light on what an issue is, that what big issues we have in the insurance industry at the moment. Hopefully that helps with regulation, then helps the consumer, and then helps with the claims as well.
Yeah, Ben, I again appreciate. Thank you for having me.
Thanks, Andy. Bye. So about 75% of our audience hasn't liked, followed, or subscribed to our podcast. It would mean the world to us, and it would help this podcast more than you know to expand our reach if you were to like, follow, or subscribe on any of the platforms that you're watching or listening on. Thanks again.